Good afternoon, dear colleagues. Thank you for responding to our invitation today. The board of the central bank at its session decided to reduce the refinancing rate, setting it at 7.5%. We'll ask Mr. Galstyan to present you to the press release, and then we'll answer your question with pleasure. Thank you. At this meeting today, the board of the Central Bank of Armenia decided to decrease the key policy rate, setting it at 7.5%. At its session of the September 10, the board of the Central Bank decided to decrease. The board agrees that a lower financing rate is necessary to continue to meet its price stability objective, ensuring an inflation rate of 4% over the medium term. At Q3, the annual CPI inflation has continued at low levels. In August, it was 1.3%. Core inflation has also remained at low levels, and in July, it was 0.3%. In Q3 2024, risks of slowing economic growth globally in the key trading partner countries of Armenia continue to persist. Global inflation continues to decline, however, sticky prices in key trading partner countries continue to remain relatively elevated. Persistent geopolitical uncertainties as well as growing tensions in international trade relations continue to create risks for future growth in global commodity prices and potential disruptions in global supply chains. At the same, recent slowing key trading partner countries' labor markets could point to some softening in demand conditions. In this context, key trading partner central banks would be expected to begin to gradually ease the policy rate in the near term, while still maintaining a relatively tight stance. Consequently, weak deflationary effects from the external sector on the Armenian economy continue to persist. Economic activity in Armenia remained robust in the third quarter of 2024, continuing to be largely driven by meaningful growth in construction and trade. The latter continues to be impacted by certain short-term factors, posing significant uncertainty with respect to the sustainability of economic growth and its long-term outlook, as well as the strength of domestic demand and consumption conditions. External demand for services continues to slow relative to 2023. At the same time, risks for demand pressure stemming from fiscal policy continue to persist. Further, labor market conditions continue to cool down, as reflected in the cooling pace of wage growth and stabilizing non-trade sticky price inflation. In order to manage possible risks stemming from conditions of high uncertainty, the board considers multiple scenarios during its deliberations. On the one hand, the board discussed scenarios where possible underlying developments would require a higher path for the policy rate relative to current market expectations. This includes scenarios related to uncertainty about the country risk premium and the neutral interest rate. On the other hand, the board discussed scenarios where potential economic developments, including the risk of cooling labor market conditions, driving a weak demand environment, would cause inflation to persistently remain at a low level. This would imply a more rapid and aggressive downward path for the policy rate than what is currently priced in markets, in order to sustainably bring inflation back to target in the medium-term horizon. Seeking to minimize the losses that could stem from this and other scenarios materializing, the balancing of the aforementioned risks in both directions, the board finds it appropriate to continue to gradually ease the policy stance. The board resolutely affirms its commitment to adopting the appropriate policy actions and strategy to ensure the price stability objective of 4% inflation in the medium term. Questions are welcome. Absolute Magusan, CivilNet. Mr. Galstyan, especially in the penultimate paragraph when we're talking about the risk premium on the one hand neutral rate, on the other hand issues related with inflation, determined also by the Fed rate. On the one hand, the central bank, so to say, cannot go for too much risk to weaken the money, to preclude asset flight from Armenia. On the other hand, the economy needs that money in order to get access to cheaper money. Given the Fed rate at this level, for how long can the central bank maintain a policy of gradually lowering the rate in conditions of inflation? This uber-balanced policy, what risks does it contain? Uber-balanced approach, I would like to mention the following. We persistently, for a long time already, since June last year, we have been reducing the policy rate that is making financing cheaper, which is determined not only by what's transpiring around us, but also the policy we have been implementing so far. Our reasonable and cautious policy allowed us to address and resolve the issue of inflation much earlier than many countries, big or small, cooperating or not cooperating, which allowed us to open up space to weaken our policy. Considering this, we believe that in this situation, let me show you something to gain an understanding of our situation. Our last survey, of inflationary expectations, demonstrate that we have a significant reduction in the amount of people with high inflationary expectations and an increase in the number of people with low inflationary expectations. At the same time, the component of uncertainty remains substantial. Given this uncertainty, we believe that our policy may be characterized by various ways. I call it reasonable and cautious. I believe this policy, and the predominant majority of the board members of the central bank have reflected on this balancing act. We will publish our minutes and you will see how the deliberations went on this matter. The idea is as follows. There are risks on the both sides. There are A-type risk, which we cannot ignore. The main is the country risk premium, which could translate into the neutral rate. Of course, also factoring in the Fed's policy, which, according to our expectations, has reached a point whereupon it should start to weaken after September 18. I think they'll take a policy rate reduction decision. I wouldn't like our policy to be fully associated with the subsequent behavior of the Fed. We're not only looking at the Fed decisions and naturally their neutral rate and other considerations, but also we predominantly look at our economy, the internal domestic demand, labor market, whatever transpired in our economy, and balancing these two, we have decided that it would be reasonable to go for 0.25 today. Mr. Galstyan, about the economic situation, the statistical committee reviewed end of last year and Q1 this year economic outlook, which affected also their semi-annual projections. So how do you see these revisions? Do they catch the real state of the economy, or is it overestimating the re-export of gold's weight in the economy, or maybe this factor and this impact is not fully appreciated? When we look, about 70% of our exports are accounted for by gold and precious stones. Doesn't this what impact will it have on structure of our economy in terms of diversification or entering foreign markets? Let me get back to our text to make it more salient. I would like to state that in paragraph 3 or 4, when we talk about the Armenian economy, we mentioned that the economic activity remained robust. As you see on the graph, we have 6.4% by the end of Q2, which is above our potential. So we think that the gap will be closing, but we still are in the positive space vis-a-vis the potential. And there's a phrase here which states that the latter, that is economic activity, continues to be impacted by certain short-term factors, posing significant uncertainty with respect to the sustainability of economic growth and the long-term outlook. So the board has discussed the issue you just referred to, and it is in the context of this discussion that our decision, we believe, is quite balanced. Mr. Galstyan, I would like to get your analysis or the central bank position, if that exists, about the most recent tax amendments to possible tax amendments to the tax code, which pertains directly to the business environment. The incentive provision by which if an economic agent had errors in the returns and it wouldn't get to the court or criminal liability if they admitted to the errors and paid the dues. The SRC is considering the possibility to remove this incentive provision. What impact this may have on the business environment and foreign investment attraction as well? Frankly speaking, I'm not aware enough of this to be able to comment. I believe the governor of the central bank should refrain from commenting on this. What I mean is, did they consult you? No, there were no discussions of this with our partners. I believe it's beyond our remit. Therefore, I'm not aware of it in depth and would prefer to refrain from answer. If there are no other questions, thank you for your attention.